What's up, guys? Welcome back to another video. Today I wanted to talk about a very simple trend following strategy style that a lot of you guys have been asking about. You've been asking about trend following and how to actually take advantage of some of the trends in the market. Well, I've got a strategy or a simple version ready for you here today. So make sure to smash that like button down below, subscribe to the channel if you want more free trading content, and let's get into it right now. All right, guys, so we're here on the chart. We're taking a look at GBP JPY, which recently has been a very, very strong trending currency pair, which is probably going to be a good example. Now, before we get into this, I do want to say I am sort of cherry picking. I'm looking for examples that look good in hindsight to show you some of the powers of this strategy. In this video, I'm going to be talking about the entry style and the exit style of a very simple technical trend following strategy using the RSI and a few moving averages. Fairly simple. Most of you guys will probably be able to pick it up pretty quickly, but it actually has a lot of potential. And it truly, for me in trading, is the simpler, the better, because, you know, again, when you start to mix a bunch of things, you get really complex with your trading, it can be unproductive, actually. And some of the best strategies that I've ever run are things like this, where they're fairly simple and straightforward. Anyways, with that said, let me talk to you guys about what we're looking for. We've talked about many times on my channel. I talk about it all the time, about how strong trends are some of the best ways, in my opinion or my view, to find some of the trade setups that give you the best reward relative to your risk. As traders, our goal is to take as little risk to make as much possible reward, right? Well, in this video and in this strategy, that's exactly what we're trying to do. We're looking for pullbacks and a strong uptrend or downtrend to try and get involved. So the first thing we need to do in order to set up this strategy is we need to know what is the trend, okay? And so for this, I've come up with a very simple technical way of identifying a trend. We have 3 moving averages, and you can actually see them. We'll zoom in right here. Check this out. These are the 3 moving averages we're going to be using for this strategy. You've got your 200 simple moving average, your 100 simple moving average, and 50 simple moving average. No exponential moving average, no fancy stuff, literally just 3 simple moving averages to help identify the trend here. Okay, so let's clear this up and go from there. So the first thing we need to do is identify a strong trend. So how do we know if a trend is actually strong or not? Well, the quickest way, in my view here, is to identify when all 3 of these moving averages are lined up, okay? So lined up meaning you have something like this. During this time frame that I'm circling now, you can see that you've got the 50-period moving average on top of the 100 and on top of the 200. Another way of saying that is that the 50 is greater than the 100, and the 100 is also greater than the 200. And a third little variable is the 50 is also greater than the 200. So the 50 is the strongest, right, or the highest moving average, and then the 100 is the middle, and then the 200 is the lowest. On the flip side, in a strong downtrend, we would actually see the exact opposite. So here's an example of a downtrend, right? A downtrend would be the 200 is on top, the 100 is in the middle, and the 50 is on the bottom. Okay, so let's pop up what we just had there. So now that's how we're going to be identifying the trend. Very, very straightforward, simple way to identify the trend is just to grab 3 moving averages and line them up like that. When you have all 3, the idea is actually that you have enough strength, the market is pushing high enough that all 3 of these are increasing in price at the same time, the moving average that is, and it shows that there's a lot of demand for a market or a lot of sell pressure on a market when doing this, okay? So that's the first thing that we're gonna need to do for this strategy. Again, like most of my strategies, this concept relies on the big trends that occasionally occur in the market and trying to capitalize on them. The next thing we need, so now that we have the trend, that's the environment. By the way, when we're in a choppy market like right here, there's just nothing to do with this strategy. There might be other ways to trade a market that is range bound like this or back and forth, but for the most part in this strategy, completely going to be ignoring times like this where you don't have a very clear trend. Once the trend gets going though, that's where we need to be looking for the next part of this, which is an entry. So now, how do we enter into this market? Of course, entries are probably the most most sought after, most interested viewpoint for most new traders. Don't get me wrong, they are important, but they are not the only thing that is important. Please remember that there is also risk management. There is understanding better ways to exit a trade profitably or exit a trade constructively, because you don't want to leave money on the table, but you also want to protect your profits in that way. So we'll talk about that in a moment. So keep staying with me here on the video. Like I said, the strategy, I'm going to go through the whole process with you, and hopefully you get something out of it. And then finally, there's also back testing and refining your strategy to make it more suitable to you, whether you're trading different currency pairs, whether you're trading gold, whatnot. Different strategies have different success rates on different markets, timeframes, etc. So that's something where you need to get into your test mode and get into the back test setup. I have some strategy videos on how to back test. You can check them out on my channel. Just search it up on YouTube, and I'll pop up a thumbnail here for what you can be looking for in terms of good back testing videos. Okay, so now that we have the trend identified, how do we know where to enter? Let's talk about the entry. So the entry for this style of trading is going to be looking for a pullback. Once we have the trend, once the trend has been checked off, and we get a pullback into a zone between the 50 and the 100, that's where we're going to be looking to buy or sell in favor of a market. Okay, so you can see right here, the market has been shooting up, and it's finally gotten enough strength to push all three moving averages in alignment like we're looking for. Now we see it pulling back, and where does it pull back to? A nice little zone right here. This zone between the 50 and the 100 is exactly what we're looking for a long side entry. Okay, the reason I like this, it's very, again, it's nothing magical, it's nothing super crazy. It's simply just a pullback in a strong moving upward market, and we're looking to try and capitalize. Okay, so when price starts to pull back, here's the idea. After a close, if there's a close inside of this zone, that is where I'm going to be looking to get long. Now, you could theoretically just take the trade as soon as it enters into this market, but let me try and zoom in a bit here so we can take a look at what we're trying to find here. Okay, so again, you can see this market has just recently started moving higher. All three moving averages at this time are starting to line up right around here. Okay, so right around here, we start to see the trend that we're looking for. And as we pull back into this zone, this is the technical side. This is where we're looking to get involved. There's our sweet spot, if you will. Okay, so the sweet spot is between the 50 and the 100 moving average. Okay, so as things pull back to that point, that is where we're going to look to get long. Now, the next part is going to be tricky. So that's the entry, right? On the flip side, if we were to look to, we'll maybe look at a downtrend example soon enough, but let's start with this uptrend and we'll come back to that. So we're looking to get involved here on the pullback. And I like the idea personally of getting in on a close or in this zone. If you get some sort of close or movement into there, we could look for the setup. So you can see right here, we've got a nice close inside of that zone, and that is where I'd be looking to get long. So let's say that I took a buy trade here. The immediate question whenever you place a trade, the first thing you should ask yourself, at least how I usually ask myself, is what do I do if I'm wrong? Because it doesn't matter what strategy you find here on YouTube from a guy like me or anybody else, you should always know that no strategy is going to be perfect. It's never going to be 100%. It's not going to give you profitability all the time. As much as people sell that and make it seem like it's easy to make money in the market, it absolutely is not. And so this strategy, like everything else, has its flaws. There's no perfect, magical strategy unless you just have, Twitter and you have zillions of followers and you can move the markets like, good old Donnie. Then that would be a great strategy, but that's no longer the case. He's not the president anymore, and we now have to rely on our own strategies to find our own entries. So anyways, with that said, a pullback to this zone, that's where I'm looking at getting involved here in terms of a pullback. So where do we put the stop? This is the most important part to any strategy, in my opinion, in terms of exits. Is not how to make money or when to make, take profit, but more so how to stop yourself from getting in trouble, taking a big loss. So that's where we need a stop loss in this trade. Let's say the price pulls back and we decide we want to get involved. Here's how I like to do it. I like to use this little tool here. I have it pulled up on the bottom of the screen called an ATR, which is the average true range. It takes the 14 periods behind the 14 candles prior and says, what's the average volatility? What's the average true range of each of these markets, and gives you a figure to look at. So in this case, when I go here, you can see it's got about a 45, let's say, average true range during this time. So for me, I like the idea of using that average true range as my stop loss, or maybe just slightly greater than it. So I can expect this market per bar right now to move on average about 45 pips for or against me. It could go against me, it could go for me. But again, if I'm wrong here, I probably expect to move like 45 pips my way or against me. So let's say I took that. It's just slightly greater than 45 pips here on the stop loss. I enter into it on the fresh bar there, and bam, now I'm off to the races. Now there's a couple different ways of approaching this. So when we need to talk about the exit, right? So the first part of the exit we already answered. Oh, you guys, I also forgot about this entry. Sorry about this. What I forgot to mention on the entry is I'm also looking for, when this price pulls back, I also want to see it pulled back on the 7-period RSI. Very simple little added filter that I personally liked when I was testing this strategy and looking at it myself before I filmed this. I liked the idea of getting involved when price is a little bit oversold on that RSI. I'm not looking for much. I'm not looking for, to be under 10 or any crazy oversold reading. I'm just looking for it to be under the standard 30 on a 7-period RSI. You can see it right there. So that's part of the entry too. Now the exit we've already sort of talked about. I like the idea of exiting on a RSI, an ATR distance, just plus a few pips maybe, just to be just slightly outside of the average true range of a market. Yeah, so that's the exit style too, is I've got my stop locked in place. That's part one. Now part two to the exit style is going to be, well, Nick, now that we have our risk protected, here's where we need to talk about the money making part. How do we make money? How much do we go for? Because you can see, depending on how you play this, sometimes you're going to catch some moves that are massive. Other times the move is not going to be so great. Of course, I picked out a perfect example for YouTube. That's what YouTube traders do, right? Make it look too good to be true, and then you actually try and go do it. It's much difficult. I just expose myself. No, trading is just hard, and I'm just giving it to you guys straight. I did cherry pick this example to show you guys the idea. But it's going to be up to you to actually go find strategy setups like this in the future. Should you decide to trade something like this, I do want to encourage you, pause and say, back test, back test, back test. Find your edge in your back testing before you try and go do it on real money in real time. So anyways, yes. So yes, it's a perfectly good example, because in this case, you can see it rallied massively over, over 500 pips there, which is a dramatic price increase. Now the question comes though, how would we objectively trade this best? Do we use trailing stops? Do we use a fixed risk to reward? Do we use, I don't know, some sort of timed exit? Well, there's lots of different exits that we can consider. Now, the first part of our exit, again, is that stop loss is locked in. That's the easy part, right? Now we've figured that out. We're using a combination of the ATR as a distance plus, looking for a decently nice timed entry. We got our stop loss locked in. Now it's time to talk about the exit in terms of a take profit, or at least where do we take profit. So let me give you guys my favorite way of approaching this, and then I'm going to give it up to you to go play with this and go back test this. Okay, so my favorite style is trailing stops. I am a big fan of trailing stops because occasionally you get some incredible moves like this one, and trailing stops is my favorite way to do that. I would, if I was trading, just like this, my number way of trading this would be to say, okay, I'm in here. Now, if price moves up in my favor some set distance or breaks through previous highs, that's where I'm going to start really trailing profits. Okay. So let's say that I do decide I want to trail stops. There's a little bit of sort of depends on how you want to play it. Comes in here, but let's say that you say, if price breaks through the previous high, I'm going to go ahead and lock in 1R, right? That might be one way you play it. So you say, okay, I'm not moving my stops. I'm not moving stops, which is a little bit difficult. Going to take a little discipline here because price could come back and tag you out. Some people might not like that. The other side of it is it gives you the chance to stay into a trade if it becomes a monster. So, if you catch the pullback right, price moves up in your favor and price starts breaking out. This could be a point where you say, okay, I'm going to trail stops aggressively from here. Maybe I move price up to lock 1R in, right? 1 times my risk. So your initial risk is this. you move that distance into profit. That could be one way, probably some way that I would do this. That's how I would approach this. Now, I know that that's not for everybody, so I want to talk about some alternatives. The other way to do it, a lot of people like to use a fixed risk to reward. So what I mean by that, let's see if I can just manually fix this. We will go take profit. There we go, now I can grab it. Little tricks in TradingView. Another way to do it is to do a fixed risk reward. So let's say you did a 3-to-1. A 3-to-1 in this case gives you a nice little trade setup. You've got, there's your risk defined, like we said, risk of 1, gain of 3. And you could just play these sort of pullbacks all day long. Anytime the price pulls back, you could jump in looking for something like 3R. Again, that's another way to play it. So I'm going to leave that up to you guys. Go test what you want. If you want 2R, if you want 3R, 4R, 5R, again, it's going to depend on the market and the time frame that you're trading it. So I encourage you, take what we're talking about. Always, 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 I like to say on YouTube, when you're watching somebody who's talking about trading, myself included, you should always test, don't trust. Just because somebody says something does not mean you should go, treat it like it's law. You should go test things for yourself and figure them out and see how they work for you on your own back testing stuff. Okay, so that's how I'm going to say. Now let's do one more example. We'll go through this process again. I'm going to erase this a little bit and we can talk about maybe a downside version. Let's see if we can find a trend to the downside. So let's say, here's one that's not going to work, which maybe is a good thing to show as well. You want to see when it works and when it doesn't. Here's an example of when it did not work. So again, same concept. We're going to be going through our checklist. Are we in a downtrend? Yes, nice little downtrend. Second part is looking for the entry. We're looking for this sweet spot to get a setup. So you can see here's an example of where price starts to move in. And now we say, okay, is the RSI overbought? Are we moving into the sweet spot? Yes and yes. So we have the criteria for a trend, a criteria for an entry. Now we have to talk about the exit. And again, this is an example that's not going to work, but it's good for me to show you guys, examples where it works and where it doesn't. Sometimes it just does not work. But again, some of the best great trend continuations happen when price just pulls back a little bit like this and keeps rallying lower. Like this almost made it there. Had it made it up into that zone, would have been a beautiful short, right? So, okay, right here, we take our average true range again. So again, using all these different tools to our advantage, 1.5. So this is a crazy volatile time. So what is that? Quite the movement. Am I wrong about that? Yeah, there it is. So we're looking for 1.5 right there. There's our stop. And if we were using a 3-to-1 right here, you'd have something like this. And again, it got stopped out fairly quickly after getting involved. So again, it's not going to work every single time, but this is the concept. This would be an example of one that just doesn't work out. But again, if you use a nice risk reward, it doesn't take that many wins to catch up to your losses and even become profitable using this sort of entry approach. Okay, so let's see if we can just find one more example. This time we won't use we won't use all of the fancy text on the screen to help us. We'll just do it out of experience. Okay, so here's an example of a downtrend one. Again, we're looking for shorts only, right? We're going in the downtrend and we're saying as price pulls back, we're looking to get involved on the downside. So let's find our different criteria. Let's see if this one would have worked or if we would have gotten stopped out. So here's our entry, right? So we probably would have missed this one because it's actually looked like it came back up. But anyways, let's see. So our average true range here is what? Our average true range is 0.4, let's say. So we would do a stop loss just above around 0.4 on this entry. So let's say we enter here and let's see if we would have stayed in or if we would have gotten stopped out. Okay. So there's our, like I said, 0.4, maybe slightly above 0.4, actually looks like we would have stayed in. So 43 pips here on the risk side. Now, in this case, you can see a beautiful trend continuation on this downward trend on GBP, JPY. So price, again, we'll go through our checklist just for memory. So we have that trend to the downside. So we're looking for shorts. We're looking for the pullback for that entry with an RSI overbought, which we got here, right? So let me do this so you can see it. circle that. Overbought there. Price is moving on the upside, so we're getting it on a pullback, which is nice. And we've got a couple other things, right? So we've got the ATR that gave us our stop loss distance. So I took the ATR, added a few pips, and that's where I was looking for a stop loss. Put stops there in place, price rolled over, and now the exit, the final piece, is however you want to play it. Do you want to trail stops? That's one way to do it. In this case, you probably would have made some good money trailing stops. And on the flip side, would have also worked had you use a fixed risk to reward. So if you did a 3-to-1, you would have ended up getting a 3-to-1 on that trade as well. If you're more patient, could have even gone for something like a 5-to-1 or a 4-to-1 in this, and all of those would have worked nicely. Just going with the trend. And that's the whole point of this strategy, is to go with the trend, you guys, here and catch some of the big moves. If you enjoyed this video, do me a favor, smash that like button down below. Subscribe to the channel if you want more content like this. I do these videos on a regular basis, giving ideas and things to look at. And I encourage you, like I said many times so far, make sure to back test this strategy if you're going to be using it, or anything else that you see on YouTube. Hey, if you made it to the end of the video, comment down below. I love seeing those comments, and I'll give you guys a heart on your comment. If you made it through this video, you're a serious MVP. 21 minutes into this film recording, so not bad at all. So thank you guys so much for sticking around with me and hanging out to the end of the video, and we will see you back in the next one. Hey guys, thanks so much for watching this video. If you enjoyed it, please remember to like the video down below, because if you don't, you're statistically 84.72% more likely to blow an account in the next 48 hours. Don't ask me how, don't ask me why, that's just facts. If you enjoyed that video and you want to see more free content here on YouTube, I'll be popping up some videos on the screen now. Go ahead and click anything that looks interesting to you.